Hello traders and welcome to the Wednesday trade recap and forecast. So long time no see. I believe it has now been a week. So there have been some opportunities. The market is a bit slower, a bit more range bound, a bit quiet. The volatility has died down. We will go over those opportunities, but first let's go over a really quiet pair, which is of course the euro and the US dollar. This one likes to range for a really long time, and there was absolutely no opportunities, no interest for me. As you know, I'm a trend trader, so I definitely wasn't seeing a trend anywhere here. I saw a clear range-bound, choppy, wicky and crappy price action, so definitely was not looking for a trade either here or in this range right here. What I'm looking for is, of course, a large impulse to the upside or a large impulse to the downside. I'm looking for the price to move away from this area, give me a nice flag to the upside, or move away to the downside, also give me a nice flag, or of course a break and retest. To be honest, I'm really not expecting anything to happen for the end of this year. So we have, I believe, maybe 2 more trading weeks. So this week and the next one. And then we have start of January. Usually start of January is when we get some nice moves to the upside or to the downside. So not really counting on getting anything here, and I believe we can just move on. There are definitely no lessons on EU. On EJ, it is a bit of a different story. So the first opportunity I want to go over is a buy opportunity right here. So for me, this definitely did not fit my plan. What is going for this trade is this 3 candle setup. So when we see a push up, 1 candle pullback, and then a continuation to the upside, usually it does continue trending up. But factoring in that we're coming from range bound price action, for me, this was definitely not enough to take a trade. So as I said, the only thing going for this, a long buy, so you would have had your order on here. The only thing going for it was this 3 candle setup. Prior price action was pretty crappy, and it was as bad as it can get. So definitely I did not have an order on. I would have been stopped out. I believe my stop would have been hit. And so yeah, with a 12 pip stop loss, let's just see quickly. Yeah, so I would have been taken out, and definitely good that I followed my plan on this one. Next opportunity I want to go over with you guys is of course a flag that happened right here. I do know that a lot of traders took it. I did not, for a couple of reasons. So the first reason was, well, the first reason to take it, actually trending price action. So we were definitely coming from trending price action, which makes the trade higher probability, and this flag is not as bad. So I have to say this flag formation does look okay, but for me, first, the size of the stop loss. So I use a 12 pip stop loss on every single trade on the euro and the Japanese yen. Really small stop loss. When I see this sort of a small stop loss, it is a huge warning sign, and I know the price can just ping around here and take me out and then go to the upside. So when I see a small stop loss, I definitely want to be alert. And then the next thing I saw was actually a bit of a momentum shift right here and right here. So if you see the size of this pullback candle, compare it to the size of the impulse candles, it is kind of bigger, or at least the size of the impulse candles. Another warning sign. So again, there were too many negatives that did not beat the positives. So the positives were a trending market, and that this flag was looking like an okay formation. But then we have the small stop loss, and we have a bit of a momentum shift, and it happened during the night when I'm sleepy, when my decision making is kind of bad. So I definitely don't want to be taking any trades with warning signs during the night, because my judgment is not as good. I stayed out of this one. This time I managed to avoid a 1% loss. Maybe next time it will fly, but that small stop loss was just too small for me. That's kind of it for the opportunities. So nothing really happened here. We were just ascending, and then price exploded to the downside. So as you can see, we got a huge push to the downside. No opportunities to enter here, and looks like it is trending to a downside. So I do classify this price action as in a downtrend, but I am seeing a warning sign at the end of this impulse right here. I'm seeing a large wick or even a huge wick, and I'm seeing an aggressive retrace. So I'm seeing sort of a V reversal happening right now. Now you can also check the volatility. If I get a 12 pip stop loss somewhere here, you can see it's really tiny. That's another warning sign. As we know, we have three market phases: trending phase, range bound phase, volatile phase. This phase is definitely volatile. I'm really not seeing a committed downtrend. Technically price is in a downtrend, but I'm not seeing it commit. What I want to see for a trade is of course a nice clean push down, flag or a break and retest, or a nice clean push up, a flag or a break and retest. Stop loss needs to be a bit bigger, so the volatility needs to die down a bit. I don't really like to trade when there is volatility like this, and I noticed usually at the end of the year we have these huge volatile moves, but they really don't end up doing nothing. They just kind of end up ranging. So yeah, it's kind of trading at the end of the year is really not that lucrative according to my backtesting and previous live experience. I'm expecting a range here, to be honest. You do need to be careful about the liquidity areas above and below the range, where other traders of course keep their stop losses, and we know that price can just tap these areas and quickly reverse. Moving on, Aussie and the US dollar. For this one, up here, absolutely no opportunity for me to enter, and I was in a trade right here. So for me, this was a really good flag trade. 12 pip stop loss. Stop loss was looking okay. This is the size of stop loss I want to see. So 12 pips, I want to see it have at least some space for the price to kind of range here. Again, what I was seeing a nice push down. I was seeing 3 or 4 candle push. I was seeing a bit of a clean close, so almost no wick. Maybe some people could classify this as a momentum shift. For me, not a momentum shift. I like this flag. I'm seeing a downtrend, and the only little warning sign you can say is this blue candle, but I was willing to tolerate this blue candle, and the rest of the flag is pretty straightforward, pretty clean. So kind of momentum slowing down and just broke the high, retraced, exactly what we want to see. Ended up being a loss, but that's just part of the game. It happens. Of course, we do have losses. We have more losses than winners because my win rate is around 30%. So that is definitely normal. And what I'm looking for now, let's exit the replay. So we can see we just ranged around here, broke down, created a huge wick to the downside, created a huge wick to the upside, got an aggressive retrace here, definitely expecting a large range in this area. I'm definitely not expecting to get any setups. If we do get a large impulse to the downside, I will look to sell, but I need to see some clear evidence of a downtrend or a clear evidence of an uptrend and conviction of the price. Nothing really more to say here. This trade was pretty interesting, so definitely fit my plan. I was happy to take it, but currently I'm just seeing a range going into another range. So yeah, just classic end of the year price action. Aussie and the Japanese yen. For this one, I was not looking for any sort of a trade. I did not have an order on anywhere here. And what happened in the prior price action, just if you're interested, for me, we descended and then ascended. When I see a descending into an ascending channel, that signals to me range bound price action. But then it all kind of got negated. We got a huge drop to the downside. Huge move. Let's just see the size. So about 300 pip move, and in one candle, that is. And then of course we are now technically in a downtrend, but I don't really like this price action. Push down, pull back, push down again. What I don't like is of course the volatility. With a 12 pip stop loss, it's really tiny. and I'm seeing a huge wick here. I'm seeing a bit of a momentum shift in the pullback and a bit of an aggressive retrace. So definitely a warning sign for me. I'm expecting the price to range here. What I will be looking for a trade is a push up, break and retest, or a push down and a break and retest, or of course a flag. So seeing nothing currently, no potential, zero potential. The pound US dollar dropped here, but then there was a flag. So maybe some people were looking at this flag to enter. For me personally, first thing I know, flags don't work out on the pound. So most of them fail according to my backtesting and live experience. Second thing, the stop loss was pretty small. I use a 15 pip stop loss on this one. And yeah, not really that much room for the price to range around. Wasn't that happy to take it. It was a clean flag. I have to say there was really nothing wrong with this flag, but knowing that most flags don't work out, knowing that the stop loss is pretty small, and it happened during the night when my judgment is pretty bad, so I just woke up and saw the trade. I was not really willing to take that risk if I'm not 100% confident in a pound dollar flag. It would have been a loss, so I would have been stopped out here. And for anyone with a bigger stop loss, let's say you had a 20 pip stop loss, let's put a 21, you would still be in a loss because it reversed back up and it would have taken you out in this candle. So what you're gonna do, it just happens, flags really don't work out on the pound unless they're super clean and the stop loss has a lot of room to breathe. Now we're stuck in a range. Just look at this price action. Is it moving up? Is it moving down? Consecutive blue candles, consecutive red candles? I don't think so. Clear range. What I'm looking for is of course the break of the most recent low, which is here, or the most recent high, which is here, and then a nice flag or a break and retest. Same thing to the downside, a nice clean flag or a nice break and retest. Nothing more to say. NJ, New Zealand Japanese yen, price action, definitely range bound. Again, just look at it, put a box in there, put a rectangle, you'll see ascending, descending, ascending, descending. So ascending into descending channel, clear range bound price action, huge drop to the downside. This pair looks exactly like the euro and the Japanese yen, and the Aussie and the Japanese yen. They all look the same. Technically in a downtrend, but again, huge volatility and not really seeing what I want to see. Ended with a huge wick, aggressive retrace here, created sort of a V reversal. I'm expecting a larger range in this area. Most recent low is here, most recent high is here. What I need to see for a trade is a large impulse down, flag or break and retest, or a large impulse up, a flag or a break and retest. And I need to see volatility die down. I need to see the stop loss looking a bit bigger. So the volatility definitely needs to die down. Be careful of the liquidity areas, as on all of the Japanese pairs, which are definitely stuck in a range. Actually, all of the pairs are stuck in a range, so be careful about the liquidity areas. Of course, above and below the range, where the traders on the lower time frames are selling the top, buying the bottom, keeping their stops in these areas. That's about it, guys. Hope you enjoyed, hope you learned something new. So I was in just one trade. That was the Aussie US dollar. It was a loss, and I will keep on trading, keep on trucking, but being a lot more patient and a lot more alert. Next week I'm on vacation, so just remember that there will be no videos next week, but there is still a trade recap on this Friday. That's it. See you guys in the next video.